Hi, I'm Katie. I'm a certified financial planner and founder of North Financial Advisors. Today I wanted to talk about funding your business. A lot of people come to me and they have a great big idea, they're really excited, and they tell me that immediately that they're looking for investors. And I think that's a very noble goal, to initially look for investors before you've even started your business, before you've even market proven your business. But it's probably not going to succeed on a broad spectrum scale, and I'll tell you why. So there are many different kinds of funding that you can take advantage of as a small business or even a more established large business. But most of the funding options don't tend to open up until you've actually been able to prove your idea and been in business for a little while. So a big misnomer that I explain to people a lot is that you're going to be able to get bank funding. So most of the time businesses, before they've started and actually while they've been in business for a couple of years, have no access to bank funding at all. It becomes very important then for you to, because you're an unproven entity, you have no credit score as a business. So you're going to tend to have to rely on your personal credit and your personal relationships with bankers to be able to get funding from a bank. So oftentimes small business loans, the very first loan that you get is actually not a small business loan at all. It's a personal line of credit that you use to start your business. An alternative to this is a business credit card. Business credit cards are actually more readily available than small business loans. And as long as you have a plan to pay off your credit card bill, of course, you're gonna want to look into these options because there are credit cards out there, and I have a blog post on this at northfinancialadvisors.com that talks very specifically about the different types of credit cards that exist out there for specifically for starting a business, because they tend to provide a nice grace period of, say, 12 months or so where there's no interest, and you can, by the time the money starts coming in, you can use that to pay off the loan. And you've also started building a credit profile for your business in the process, which is fantastic. Some of the other funding options that I hear a lot about are people taking on private investors, venture capital funding, angel investing, those kinds of things. Just know that as you go up the chain of some of these additional types of funding sources, the trade-off is that you're generally giving up some form of management or oversight of your company. If you're bringing on a venture capitalist, for instance, or an angel investor, they're going to want to come in and see immediate returns, not immediate, but large returns over the course of their investment. And in order to do that, they're going to be watching you like a hawk and wanting to come in and explain to you how you should do your business so that they can try to seek additional returns, and that their investment will succeed. So if you're the kind of person who's okay with not, with losing out on some of the power, and that sort of a thing, fine, that's great. But if you're more interested in having control over your life and control over the decisions related to your business, you're going to want to look into more of the self-funding route. And read my blog post for more information on that. It will help you kind of think through some of the choices that you have. But hopefully this has been helpful for you today. Check out northfinancialadvisors.com for more information and join me next time.